Hello and welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess. We do these live streams every single day. Today is the second stream of the day because we cannot not talk about what is happening in the US right now. So the interest rates have just come in and there has been an interest rate pause. So we need to talk about that today. And then we'll be hearing what Jerome has to say for himself. So first of all, let's take a look at how Bitcoin is reacting to this news. So we have just heard that there is an interest rate pause. As expected, as of yesterday, we did hear yesterday that inflation had dropped down to 4%, not far away from the US's goal of hitting 2% now. We did have a high of 9.1 back in June 2022 year on year, and we have now got that back down to 4%. So we are closer and closer to the Fed's mission of getting inflation down to 2%. Definitely positive things, and that decline in inflation is thanks to those interest rate hikes. So they have helped push inflation down, and when we saw inflation was doing as it was supposed to do, we did see a high probability that the interest rate pause was going to occur, and now it has occurred. Now, as I was discussing in this morning's stream, for those who missed it, we had some scenarios that could happen today. Now, there was a 95% probability that we were going to see interest rates pause, and we were going to see no change in the interest rates this evening. Now, as I said this morning, I imagine this is already priced in. This was highly anticipated. So when we see this, typically an interest rate pause is really, really bullish for the markets. The markets, any kind of markets, the stock markets, the cryptocurrency markets, gold, silver, none of these assets like to see high interest rates. So a pause in the interest rate hikes is really, really bullish. But this was already priced into Bitcoin, I believe. And therefore, we have seen some sort of volatility, but in no general direction. I mean, this is the 1 minute, and you can see we haven't really seen that much movement. We've just seen sideways action here, but with a little bit of volatility in its step. Now, we can take a look at this and clearly see the DXY is the reason we've seen this volatility. The DXY is incredibly high right now. It has moved significantly to the upside. Now, I don't believe this is going to last long, but when this happens and we measure Bitcoin against the US dollar, obviously, we are going to see that fluctuation in the price there. Let me check that everything is running smoothly. It looks like there's not it's not running as smoothly as I would like it to. Let me know in the chat if there is a problem with today's stream, and I will try and fix it. Let's see if I can close some of my tabs down and make this a little bit better. Let's see what else is going on in today's news. Let's discuss what's happening here anyway, because we have had an article published on the Crypto Saving Expert website here that said Fed announces no change to interest rates. So after concluding its FOMC meeting, the Federal Reserve has announced it will not change interest rates in June. Very, very positive. Now let's explain this in a little bit more detail. What happens is the inflation rate absolutely soared. As I just said, it reached 9.1% in June 2022. And when that happens, the Fed needs to increase interest rates. If they increase interest rates, people have more interest, they're taking out less loans, they're therefore spending less money, and the economy starts to shrink and inflation starts to decline. Now that's what's been happening over and over again. We've seen interest rates soar in the last couple of months. They've been increasing them and increasing them and increasing them, and it has been insanely high, and throughout that time it's caused a huge amount of problems when the interest rates are high and people are taking out less loans and the economy is shrinking. People are spending less money, people are investing less money, and people are looking away from risk on assets like cryptocurrencies, like Bitcoin and like Ethereum. So this is really negative for the markets when we see these interest rate hikes. Now that we've seen these interest rate hikes pause, this is a positive thing long term. Now this was expected as of yesterday. The expectation of having an interest rate pause was at around 95% today. So it would have been pretty shocking if we were to see another interest rate hike. But throughout this time, I do believe that it had already been priced in to Bitcoin. We have seen that volatility. We have seen the DXY increase. So the DXY is a measure of the US dollar against other 6 other fiat currencies, so currencies issued by a government. So we have seen the dollar rise within the last couple of minutes, and that obviously always has a negative correlation with Bitcoin because we measure Bitcoin against the dollar. So this is what's happened here. Now, why we have come on this stream, you may ask, is because we are about to hear from Jerome and see what he really has to say for himself. Let's take a look through this article. We've got another 5 minutes to go. So Wednesday, the 14th of June, marks another FOMC meeting for the Fed, which occurs 8 times a year. The meetings are conducted by the Board of Governors of the Federal Reserve, with the chair, Jerome Powell, being the face of these events. So following the adjournment of the FOMC meeting, the Fed announced at 7 p.m. BST time that it would not be increasing interest rates in June. So we reported earlier on today that the market was pricing in this decision by the Fed at a 95.3% probability. So this is what I was just saying. There was already a high probability that we were going to get this. This is exactly what was expected. This is what we have seen right here, and this is why I think this was already priced in for Bitcoin right now. So taking a look at this article further, the US Consumer Price Index, which measures inflation, was released on Tuesday and came in below forecast at 4%. However, before the inflation figure had been released, a no change decision still had a probability of 73.5%, suggesting it was anticipated leading into the news-heavy week. So we did see yesterday that inflation has come down. I've pulled this up here to 4%. Now, it was actually expected to be higher, so we can see here in June that we have seen that decline from June 2020 to 2022. Year-on-year inflation was up to 9.1%. We have a mission of getting it down to 2%. We are now only 2% away from that. So that is a really positive thing to see here. Hopefully, we do see inflation continue to decline in the US, and we do start to see these interest rates starting to move to the downside once again. Fingers crossed. Now, we are waiting for Jerome Powell to come on and tell us more, but until then, let's take a look at what's happening with Bitcoin right now. Let me know in the chat if you're in any trades. Let me pull this up ready for today. Let me know in the chat if you are trading this. This is a very risky trade right now. This is something that I am definitely not taking part in, and that is a risk, I would say. It's a very volatile market, and you do need to be incredibly careful. Let's take a look at when they are going to come on, so that we've got about 4 minutes left until they come on stage and tell us what they want to say, and we will be streaming it here so we can all see exactly what is happening. So we can see Bitcoin is currently at $25,860. If we zoom back out against the 4-hour chart, we are still inside this descending wedge. We can pull this out onto the daily chart. Let's get this right, because I expect we are going to see some volatility when he comes and says what he has to say for himself. Now, let's get this correct. So let's get this resistance drawn on here. We are looking at this point here. We are also looking at this level of support here. Please don't forget, if you are tuning in today, to like and subscribe and press the bell notification button. We do a live stream here every single weekday, and this is the second one of the day, so please make sure to show some love on today's stream. We can see here that we have a level of support on the Bitcoin daily chart at around $25,360, and we have resistance up at $27,000 there as well. If we take a look at the daily chart and we zoom out a little bit, you can also see we have a very strong level of previous resistance here, which is sat at $25,250. And if we zoom in further, you can see that this level of resistance also was more of a band that lasts until 24,400. So I'm expecting this zone here to act as a level of support. Well, I'm hoping that it acts as a level of support. So we can see here that we are approaching that pretty closely. We have wicked down to it a couple of times, but we have not yet touched that level. Let me check that the stream today is running okay. Let me know if you can see today's stream, and please don't forget, if you haven't already, to like and subscribe and hit the bell notification button so you don't miss the latest cryptocurrency news. I've just realized I haven't even changed the thumbnail for today's stream, so let's get that changed. We've got 1.5 minutes before Jerome Powell comes on and says what he's got to say for himself. It's going to be an interesting one. It's going to cause some volatility. So let's all get ready for that. If we take a look at the Bitcoin 1 minute chart, you can see volatility has already hit, but there is definitely more to come. It's going to be a volatile half an hour, to say the least, and we are going to be streaming it all right here. So please don't forget to give us a like and subscribe and press the bell notification button. We've got 2 minutes left. Now, I have seen them be late before to these, about 2 minutes late. So let's continue through this article and see what else we've got in this Crypto Saving Expert article here. Hopefully you can all see this clearly. Let's see what is going on, and soon we will hear from Jerome himself. So taking a look at this, let me get everything up correctly. Everything's everywhere. So we can see with interest rates now remaining at 5.25%. This is the first time no changes occurred since January 2022. Now, I would like to point out this is something that we've been predicting here on the channel for a while. So this marks a significant milestone in the tackle against inflation. So with news regarding interest rates favorable, the effect on the market will remain to be seen, as it was a resounding expectation. Can it provide the bullish momentum Bitcoin requires, or will it be another nothing event much like the CPI release? So following the Fed's rate decision, all eyes will be on Jerome Powell during the FOMC press conference, which commences at 7:30. So in any minute now, in fact, we are going to hear about this. Throughout the conference, investors listen to hawkish and dovish comments, which allude to how the Fed sees the US economy and recent data. So this is really important here. We're going to actually hear their opinions and see what the conversations are like inside the Fed, and seeing what they're thinking in the long term. And that's really important. Remember, throughout this whole stream, higher interest rates are bad for the markets, lower interest rates are good for the markets. A pause is good for the markets long term. We've just not seen that reflected in Bitcoin's price today, because it was already priced in, and because the DXY has had a move to the upside as a result of this. Now let's see if he is starting. He is starting, so let's get this ready. Let's get today's stream up and going. Hopefully you can all hear this okay. Let's get this on the roll. So let's see what's going on here. We need to press play on today's stream. So can you hear this all clearly? Let me know if you can in the chat. Let me know if you can hear this.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs-to-workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Colby.
Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they've felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So, I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July 2 things. 1, decision hasn't been made. 2, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots, stronger GDP, less of a hit to unemployment, slower progress on inflation, and I'm wondering, in this sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming.
Right, let's talk about what is happening now. I feel like you're going to be able to hear me twice here, so let's see if I can fix this. Can you hear an echo in this stream? Let me know if you can, and I will try and fix that problem. Let's see what is going on now. Let's recap what we have just seen. You're definitely going to be able to hear an echo in this what's it called right now? Let me know in the chat if you can hear an echo. I will try and fix this as quickly as possible. Right, we don't want. Right, come on, let's go. I can hear an echo, but you guys can't. So let's continue with what's happening here exactly. So we can see what's happened in this chat. There is an echo. Okay, hold on a second. Let's see if we can fix this. Let me check this. Is this better? Let me know if you can hear, if this echo has gone away. Let's see what is in what's just been said. Let's recap what's just been said in that meeting there. So we can see that he has reiterated that the Fed understands the pain that high inflation is causing. He said, we've covered a lot of ground, and the full effects of our tightening is yet to be felt. If we take a look at this thread here that I was just reading through, then we can see that the Fed finally paused interest rate hikes after 10 consecutive increases in the Fed funds rate. The pause finally came after some great news about inflation over the last few months. So we have seen inflation come down to 4% after being at a high of 9.1% last June 2022. But the Fed has never hiked faster than they did over the last year. He has said in that meeting there that interest has paused for the time being, but this doesn't mean that it's going to stop going up in the future. They are still keeping a close eye on this. We still are far away from the CPI target of 2%. Inflation is still up at 4% in the US right now. If we take a look at the updates that we've just seen, the recap of that meeting, of that announcement that was, without price stability, the economy doesn't work for anyone. So he emphasizes that the inflation fight is still job number one. He says that nearly all the FOMC meetings members expected further tightening this year. So this is what we're expecting. And this is why we've seen the DXY start to move to the downside during that meeting as well. And because of that, we have started to see Bitcoin move to the upside again. So what we see here, it's a really big battle here, because when we see higher interest rates, it's not a good thing for the markets long term. But when we see these problems in the markets, people realize that they want to move to Bitcoin. So when there's uncertainty in the markets, in the financial markets, in terms of the traditional markets, people look for other assets like Bitcoin. But also when there's some extreme uncertainty, some people turn away. But this is something that was expected. And when the DXY is moving to the downside, it has a negative correlation with the price of Bitcoin. When the DXY is moving down, Bitcoin tends to move up. And when the DXY is moving up, Bitcoin tends to move down, because we primarily measure Bitcoin against the dollar. Now we have seen, let's continue with this. Powell prefers to growth are subdued in the updated projections. Growth of 1% is below the long run estimate. He notes that long run estimate is 1.8. So what he's saying here is we've now paused interest rate hikes right now. And if we do increase them over the rest of the year, that is expected to happen, it's going to be at a much slower rate. So the Fed has hiked, never hiked faster than they did over the last year. And now they're realizing that they need to cool this off slightly. Yes, we may need to continue to increase in the future, but it's going to be at a slower pace. So the longer term inflation expectations appear well anchored, according to Powell. He said, Powell says the process of getting inflation back to 2% target has a long way to go. And we can all agree with that. We are still up at 4%, which is 2% higher than that target goal. He said we are highly attentive to the risks that high inflation poses to both sides of our mandate and are strongly committed to returning inflation to 2%. The market clearly doubt that the Fed will go for 2 hikes, as the dot plot suggests. The peak of the Fed fund rate implied in the OIS market is that about 5.3% in September, suggesting only 1 increase is expected. So let's continue up to the top here. Let's see what's happening in more recent news. The market really isn't buying this 2023 projection. Application specialist Owen Mind says the Fed raised its 2023 projection by 5 basis points, whereas the market has so far increased its implied projection by over 10 basis points after Powell's statement. So let's take a look back at Bitcoin and the DXY here anyway. The DXY has started to retrace slightly following this news. Bitcoin has started to retrace slightly following this news. If we take a look at the 1 hour chart, we're going to really look like, that volatility, it was there. It wasn't very strong. We saw more volatility yesterday with the inflation rate announcement. Right now, we are just going to see that small amount of volatility. This is not something I trade unless I'm buying the dip and just scalp trading that at the bottom, buying as soon as we see some lows. That's the only trade I'm taking part in. But multitasking and trading at live streaming at the same time is not my strong suit. We can see here, obviously, we are going to continue to see volatility in the next couple of hours. It is going to start to cool off fairly quickly, though, I do believe. Other than that, it has been an interesting evening to see interest rates pause. This is something I have been saying is priced into the price of Bitcoin, and it looks like it really has been. So we haven't seen that volatility as expected by many people. If you are more interested and learning a little bit more about this, make sure to go to this article that I've just dropped in the live chat on cryptosavingexpert.com. But that is really all I wanted to show you today. I just wanted to sit through that meeting for you guys and try and explain that a little bit more clearly as well. So thank you very much for tuning in. I hope you have all enjoyed, and we will be back here tomorrow morning to hear more cryptocurrency news. So I will see you all then. Goodbye.